Today, Bitcoin dips after it was revealed the US economy shrank in Q1. And now that President Trump hit the 100-day mark in office, we take a deep dive into what has changed for crypto since he kicked off his second term. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies trading lower along with broader markets after it was revealed that the US economy contracted in the first quarter, largely due to a surge in imports ahead of President Trump's tariffs. As of noon Eastern, Bitcoin dipped by around 1% to $94,000, Ether dropped nearly 3%, and Dogecoin fell by more than 5.5%, even after the Nasdaq filed to list and trade the 21 shares Dogecoin ETF this week. Taking a look at crypto-focused stocks, all are in the red as of noon except for Strategy, which climbed slightly. This comes after a Commerce Department report showed that gross domestic product fell at a 0.3% annualized pace. This was the first quarter of negative growth since Q1 of 2022. All right, let's jump right into our main story. President Trump is capping off 100 days in office for his second term, and so Crypto World's Talia Kaplan takes us through what has changed for digital assets since Inauguration Day in January.
The crypto industry had high hopes for another Trump presidency, a kinder SEC, new regulations, and even a potential explosion in digital asset prices. And sure enough, markets roared after Donald Trump won the election in November, with Bitcoin hitting a new record high of $109,350 on January 20th, Inauguration Day. How would you rate President Trump's first 100 days as it relates to crypto?
I'd say with respect to increasing just the general awareness of crypto, I would give him a rating of possibly 90 or 95. Because he has now increased the base of people who may be willing to invest or hold crypto at some point.
Now, Trump actually flipped his stance on crypto from a known critic in his first administration to backing the industry during the 2024 election. While campaigning, he even addressed the crypto crowd at the largest Bitcoin conference in the U.S. Trump promised to be a crypto president while courting cash from the industry by saying he'd promote the adoption of digital assets, a stark contrast from the Biden administration's crypto crackdown.
What we saw with the prior administration was an attack on crypto, which really was not defensible and really was not even explainable. Why would you attack technology? And why would you attack 55 million Americans who are engaging with this technology? What we see with the new administration is a change. The new administration wants to make the U.S. the crypto capital of the world.
President Trump's love of crypto only happened recently. Like, during his administration, he was very cool on crypto. But we spent, the last 4 years trying to get both Democrats and Republicans to support crypto, to become more supportive. So as a person who first learned about Bitcoin during the Obama administration, when I served in that administration in 2013, as a person who's been working full-time in this space for 8 years, I want all elected officials to support crypto, to see the value.
Even before Trump was back in office, he got right to work enacting a pro-crypto agenda. In December, Trump appointed the first ever White House AI and crypto czar, venture investor David Sachs. Once reclaiming office, one of President Trump's first acts in his first week was an executive order. That order aimed to promote U.S. leadership in digital assets and created a working group tasked with proposing new crypto regulations. Fast forward to March, President Trump signed another executive order creating a strategic Bitcoin reserve. The order also established a U.S. digital asset stockpile managed by the Treasury Department. Sachs said the reserves will be funded exclusively with crypto seized in criminal and civil forfeiture cases. Even before Trump was back in office, he and his family leaned into digital assets with the launch of the crypto project World Liberty Financial in October. Trump also announced the launch of a meme coin a few days before his inauguration. Those crypto ambitions didn't slow down after Trump was sworn in. We saw a wave of digital asset-related announcements tied to the Trump family. In March, World Liberty said it raised $250 million in its second token sale, bringing the total amount of coins sold to $550 million. A few days later, the project announced it was launching a stablecoin. And the next week, crypto infrastructure company Hut 8 announced President Trump's sons, Eric and Don Jr., are investing in a new Bitcoin mining firm, American Bitcoin, which is controlled by Hut 8.
We're the most canceled company probably on earth. It actually is what drove us toward cryptocurrency. You realize that cryptocurrency couldn't be weaponized. You realized that cryptocurrency was a lot faster, it was a lot more pragmatic, it was a lot more transparent, it was exponentially cheaper. And it made me realize that, really kind of the crypto world is really the future of the modern financial system. There's no question about that.
All those Trump family crypto projects didn't come without criticism. In February, Democratic Congressman Sam Liccardo proposed legislation dubbed the Meme Act, which takes aim at President Trump's token.
As you might expect, all of those co-sponsors are Democratic. Now, this is something in any other administration at any other moment, we would have broad bipartisan support for this. This fits in that broad category of duh. And obviously, any responsible legislature would say we need to prohibit this kind of conduct because we know it's corrupting no matter whether you're Democrat or Republican. Nonetheless, we have a cult of Trump right now that has really cast a broad shadow over this Congress.
On top of that proposed legislation, a group of Democratic lawmakers spearheaded by Senator Elizabeth Warren sent letters to financial regulators and White House officials warning of potential conflicts of interest tied to Trump's crypto ventures. Most recently, Senator Adam Schiff joined Warren in sending a letter to the U.S. Office of Government Ethics asking for an urgent inquiry after Trump's official meme coin surged on the heels of an announcement that top holders of the token were offered a dinner with the president. A White House spokesperson maintains that President Trump's assets are at a trust managed by his children and that there are no conflicts of interest.
It's definitely creating some noise around the edges, to be sure, and it gives fodder to Senator Warren and her cronies pointing out potential conflicts of interest. But the hope is that with regulation, these products as well that would be coming out of his family business would also fall within those boundaries too. So I think it kind of creates a better argument for pushing forward on the regulatory front.
And President Trump has been vocal in his support for crypto regulation his executive orders can't solve. In fact, when addressing attendees at the Digital Asset Summit in a video message, the president urged Congress to pass landmark crypto legislation. He also slammed the prior administration's stance on crypto, referencing Operation Choke Point 2.0, which some perceive as the Biden administration's efforts to restrict banks from providing services to crypto businesses.
We're ending the last administration's regulatory war on crypto and Bitcoin, and that includes stopping the lawless Operation Choke Point 2.0. Operation Choke Point went beyond regulation, and I mean far beyond. It was a form of lawfare through government weaponization. Frankly, it was a disgrace. But as of January 20th, 2025, all of that is over.
Since the administration took office, it's been a net positive for industry. And a lot of this comes from the regulatory landscape. In the prior years, the Bitcoin industry and the crypto industry as a whole, we had a lot of headwinds that we were facing. We find ourselves with, some tailwinds at this point. In particular, the one that I would like to point to that I think has had the highest impact for the industry as a whole is SAB 121. What that is the repeal of something that essentially discouraged traditional banks from having exposure to Bitcoin or other forms of cryptocurrency.
That repeal came in January. After years of lobbying by the crypto industry, the SEC rescinded the accounting rule that forced banks to treat Bitcoin and other tokens as a liability on their balance sheets. The repeal marked a major step by the new Trump administration to make it easier for U.S. companies and financial firms to deal in virtual, decentralized currencies.
We just needed the headwinds to go away to create an opportunity for the industry to thrive and flourish in the United States. And I think that that's happened. With very quick moves in the very early days of the administration, the headwinds we were facing from groups such as the SEC and other regulatory bodies, they've really calmed.
On Trump's inauguration day, Gary Gensler stepped down from his role as SEC chair. Gensler was widely criticized by the crypto community for his regulation by enforcement approach to crypto. Since Gensler's departure, several crypto companies, including Ripple, Coinbase, and Kraken, saw lawsuits or investigations dropped, resolved, or put on hold by the agency. In mid-April, the Senate confirmed President Trump's pro-crypto SEC chair pick, Paul Atkins.
it couldn't be a better choice, really. You have a veteran SEC member, you have somebody who understands crypto, who's been involved with these businesses. So who better to help lead the effort in creating new rules and regulations around digital assets than somebody who understands the space, not just from an academic standpoint, which is what we thought would be a benefit with Gensler, but turned out not to be, but from somebody who's actually worked with these businesses and tried to help them work with regulators.
Also in April, President Trump signed a resolution rolling back what's called the DeFi broker rule. That resolution eliminated a controversial crypto tax guideline approved in the last days of the Biden administration. The IRS rule treated DeFi platforms as brokers, requiring them to track and report user activity. The move marked the first crypto bill ever signed into law, and the bipartisan support could bode well for other crypto legislative priorities. Both the industry and President Trump have now set their sights on what Congress can do to develop rules for crypto, with a particular focus on stablecoins and market structure. Right now, 2 stablecoin regulation bills are working their way through the U.S. legislative process, the House's Stable Act and the Senate's Genius Act. President Trump said he hopes lawmakers will send stablecoin legislation to his desk before Congress's August recess.
I'm holding this administration accountable in all its promises to the crypto industry to pass stablecoin legislation. So while I'm optimistic about the Trump administration's positive nature approach to crypto, I want to see real action. And for me, that is a signed stablecoin bill and real action. 2 bills on market structure that we can actually debate. That I'll see as success. Everything else is just noise at this point.
The president promised a reset of crypto policy here in the United States, and thus far the president has delivered on that promise. We've seen executive orders, the formation of task forces and working groups, and now legislation on the move that will make it a reality here in the United States in exactly the way that the president promised. At the same time, we're very pleased to see Democrats and Republicans alike embrace this call to action, and we think that action is long overdue. At the same time, the United States still has a chance to catch up to the rest of the world, and we're excited to see U.S. leadership return once again to this important innovation.
Okay, that's all for Crypto World today. We're back again tomorrow. We will see you then.